Hi, Leeb Group viewers. It's Greg Dorsey here, Tuesday, January 26th. Well, consumer confidence inched higher today for the latest month anyway, according to the Conference Board. The latest reading at 55.9 was up from 53.6 in the prior month, and the third consecutive monthly increase. It also marks the highest reading since September 2008. Analysts had been expecting a print of 53.5, so today's number was somewhat of a positive surprise. But before you get too excited about this, let's take a historical perspective. David Rosenberg, chief economist and strategist at Gluskin Sheff in Toronto, has pointed out in the past that today's consumer confidence reading is still lower than it was at the depths of each of the last, all the recessions dating back to the early 1980s. Consumer confidence typically tops out above 100 coming out of recessions. So we still really have a long ways to go before we can feel comfortable. Also today, Johnson's Red Book of retail sales was out, showed a 1% rise in same-store sales last week, although the month-over-month figure declined 1.4%. We're still seeing a lot of discounting, continuing the trend that we witnessed during the holiday sales season. And the weekly increase came compliments of higher food and drug prices, even though demand for other items lessened. Stock investors weren't impressed by these numbers, and shares closed in the red for the day. The S&P closed in the 1090, 1092 area for the third day running. That represents a fairly important support dating back to mid-October. We've bounced off it a number of times. From a technical perspective, failing that number, the first stop is the 1070, 1075 area, 1.5% or so, followed by a move back to the 1020 area on the S&P. This latter level would mark a much-needed greater than 10% decline. We'll see how things play out in the next couple of weeks. That's all for now. Thanks for stopping by.